everyone deploys capital at the wrong time, and then everyone's not deploying capital at the right time. Bitcoin is the only asset in human history that it has no dilution risk and it has no counterparty risk. So no matter how much time, energy, or resources humanity puts into it, we're never going to be able to create more than 21 million Bitcoin.
Alrighty. Well, today we're thrilled to have Joe Burnett with us. Joe is the Senior Product Marketing Manager at Unchained, and he delivers amazing breakdowns on everything Bitcoin across all social media platforms. Joe also led a Bitcoin mining focused podcast that was absolutely formative for me early on when I was getting into the industry. And Joe's got such a unique perspective on how we can use data to drive innovation and decision making in the Bitcoin space. So, super excited to have Joe and dive into the role of these analytics shaping our industry. Joe, thank you so much for joining us today.
Awesome. Thanks, Bo. Glad to be here.
Well, I want to focus on a couple things that you have a lot of unique experience between the Bitcoin space broadly, but also mining. And so I'm going to ask you several questions that I hope you answer from kind of both perspectives, which is definitely a tall ask, but you're pretty practiced at this, so I don't really want to make it too easy for you. Since we've got a chance to have a lot of value and perspective from someone who's seen so many sides of the industry. But we'll start with a softball. So first, how did you get into Bitcoin?
Yeah, it's a great question. I always love to hear people's Bitcoin origin stories. I like to think that my background was kind of primed to get into Bitcoin. I remember first learning about Bitcoin in college, just surfing on Reddit, basically early 2017. So maybe early to people listening to this podcast, but in Bitcoin world, by no means early at all. And I had always kind of grown up interested in investing generally, interested in technology, like building Android apps, like when I was in middle school, things like that, and just happened to somehow subscribe to like our cryptocurrency or our Bitcoin back then. And I just remember being fascinated by the NGU, number go up technology, seeing Bitcoin go from 1,000 to 3,000 to 6,000, then ultimately like 18, 19,000 by the end of 2017. I was just like, what is happening here? Like, this doesn't happen. Like, I was sitting on my Coca-Cola, IBM, blue chip US public equities, and, they go up maybe like 3% per year. They pay a 3% dividend. And like, that was kind of how you saved for the future, at least in my mind. And then this Bitcoin thing was just going like doubling every month, at least, toward the end, it felt like it. That was the case. So of 2017. And so really just kind of the number go up, really captivated me. And then throughout the bear market of 2018 and 2019, I started to really dive deep into what exactly it was, because, I put a little bit of money that I had in college back in 2017, and I saw it like double and triple or whatnot. And it just kind of hooked me ever since. And then, yeah, 2018 just really dove in and figured it out. Came to the conclusion that Bitcoin was like really important and probably really valuable. And a lot of the people that were against Bitcoin had very, bad arguments from what I could tell. And the price kept falling throughout 2018. Eventually it fell to like $3,000. And I was like, I feel like I'm right here. And a lot of people are wrong. And I just couldn't get away from it. And ever since, after that, it was kind of off to the races.
So you came at it from a it's just math kind of perspective and couldn't see why anybody was seeing otherwise, essentially outside of your bubble.
Yeah, pretty much. It was like I I started to like really question what money was. Like, not only was I interested in investing in technology, but I had kind of come from like a libertarian type mindset of like more freedom, less government is like an ideal solution. So I was primed to, I think, like consider Bitcoin was possible. And then like once I questioned like what it actually is money, and I was like, well, at the end of the day, in my opinion, money is just a good or a tool, and specific goods or tools are best suited to be money because they have specific monetary properties. And then when you evaluate Bitcoin's monetary properties against all of the other monies throughout history, you kind of, in my opinion, come to the conclusion that Bitcoin literally is the best money. And most people just don't recognize that for whatever reason. And obviously, over time, more people have recognized it. And hence, the price of Bitcoin has gone crazy over the last 15 years. And so, yeah, it just seemed like it was like a mass market inefficiency, and the inefficient side of the market, which was the people that had not adopted Bitcoin yet, didn't really know why they hadn't adopted Bitcoin yet, or they had terrible arguments as to why they hadn't. And then I would see the arguments as to like the people that did hold Bitcoin, why they were holding Bitcoin. And it seemed like a very asymmetric bed of, you know, there's a high probability or a decent probability that these people that are holding this thing are right. And I think so far that's been the case. And I continue to expect that to be the case.
So definitely a numbers guy, definitely a rational thinker. I mean, you had a background where you got a Master of Science in Business Analytics. You worked for Ernst and Young. You worked for mining companies, and now you're at Unchained. So were there any more difficult or more kind of like serious gaps to close when you were making some of those transitions, or do you feel like it was a really natural flow? Because to me, that seems like many different mindset shifts.
Yeah, that I would agree that it is kind of like a unique career path, jumping from different master's degree to EY to Bitcoin mining, then to Bitcoin. I mean, every step of the way, I've been excited. Like honestly, one of the reasons that I pursued the master's degree in business analytics was because of like honestly, kind of because of the stock to flow model, like that kind of played a role. Like, obviously, it's not a perfect model by any means, but it was interesting at the time and like trying to like figure out what the price of Bitcoin could be. And I still think like the idea of stock to flow in general, like is right when it comes to like evaluating a good money. Like, it needs to be scarce and therefore have a very high stock to flow ratio. And so like that kind of led to getting the master's degree. And then like I could have worked in Bitcoin full time after getting the master's degree, but I also kind of wanted a kind of a backup just to say that I like had a real job outside of Bitcoin, just straight out of college. So that's why I worked at EY, and then at EY quickly figured I was like, you know what, like this is cool, like great experience, and I'm glad that I did it. But my passion is in Bitcoin, and an opportunity in Bitcoin mining happened to pop up. And obviously, I joined Blockware back in 2021, and that was when the Bitcoin mining space was absolutely ripping. And difficulty was relatively low, hash price was really high, and miners were printing money all across the industry. And so I was like, well, I just need to go work in Bitcoin because this is my passion. And then the bear market came, and Blockware survived and continues to thrive to this day. And then I also found that like a big part of my passion is just helping people hold Bitcoin, which is why I eventually decided to join Unchained, and now that's where I'm at today.
Very cool. Well, I think you've got a super unique perspective, and I can see how it's kind of been shaped over the last few years being across all these verticals. Some things that you've said recently that I've really resonated with and echo people that we've had on recently, like Jeff Booth, are the best portfolio allocators of the next 2 decades are using Bitcoin as their hurdle rate, and that few people can beat Bitcoin, and that most people who are allocating capital are just burning money. So, for those people who are trying to allocate capital in the Bitcoin space, and especially in the mining space like us, how do you think that it's possible to outpace the compound annual growth rate of Bitcoin as your hurdle rate for success?
Yeah, it's a great question. And it's extremely difficult today, right? I mean, not only will, if you assume that Bitcoin is the best money, decades down the line and everyone has adopted Bitcoin, it's going to be a lot harder than it is today to like outperform the dollar. Like everyone intuitively today that knows that you can't just sit on dollars even in a savings account. Like you have to invest a significant portion of your portfolio into equities, bonds, real estate, or whatnot. And over time, you kind of have tailwinds behind you of just natural monetary debasement. How to outperform Bitcoin? I think like historically, I've said there's like a few different ways to outperform Bitcoin. One I would say is Bitcoin mining. Obviously, all of these are going to be very difficult to do in practice, but if you are going to outperform Bitcoin, you probably need to get exposure to like something within the Bitcoin space or some sort of extremely exponential technology. One would be Bitcoin mining, just because if you have cheap enough energy and you can source machines in a cheap enough manner, then mathematically you should be able to outperform Bitcoin. Of course, in practice, it's very difficult, but it is certainly possible. Two, Bitcoin VC. I've said like, potentially investing in some of these early companies um, will enable you to outperform Bitcoin on a long time horizon. Obviously, there's no guarantee, but by any means, they're all startups still to this day, but that is one potential way to outperform Bitcoin. And then three, maybe like using some form of conservative leverage, something like MicroStrategy, where they're borrowing against Bitcoin, or using Unchained. Companies can borrow against their Bitcoin at Unchained and buy more Bitcoin, buy miners, or whatever they want to. And so I would say like those are kind of three key ways that kind of come to the top of my mind on how you could actually outperform Bitcoin today. But it's extremely difficult to do so, and I think most people should probably just have a pretty big chunk of their portfolio in cold storage Bitcoin.
For sure. And that's what we tell anybody coming in to work with us as well is like, hey, mining is awesome. It helps you not only potentially make a Bitcoin denominated return, but to me at least, it's been like getting a second engineering degree and probably more valuable than the first one. But everybody's got to work with tools that make sense for them. And to your third point, Unchained, it's a company that we work with as a company. We've taken out Bitcoin backed loans. We store our Bitcoin in Multisig. Maybe talk about that for a minute. I don't think most people who are even in the Bitcoin space have heard or really done a deep dive into Multisig. Definitely, even fewer have done Bitcoin backed loans. And hardly anybody recognizes how easy it is to set up multisig nowadays. So maybe talk a little bit about kind of the suite of products you guys use and especially how they cater to miners, since that's a lot of our audience.
Yeah, absolutely. Yeah, I think like when you initially get into Bitcoin, you see the number going up, and like that's how you learn about Bitcoin, and you don't think about custody whatsoever when you're thinking about that, because you know when it comes to stocks or any other sort of asset that you may have used in the past, you don't even it's not something that you consider. You just trust what's in your Fidelity account or your E-Trade account or whatever you've historically used. With Bitcoin, it's kind of a little different because you might start that way through a Bitcoin ETF or Coinbase, and then you realize that when you use a third party to hold your Bitcoin, you don't actually hold the Bitcoin. And one of the key reasons Bitcoin is so unique is because you can literally take physical possession of it, and then on your computer you can verify that you received real Bitcoin. Whereas like unlike every other asset in the world, you're kind of always trusting another third party that one, they actually hold what they say they hold, and two, that like they're not just lying to you. And so Unchained is unique because we can enable something called collaborative custody, which means as someone that holds a significant chunk of Bitcoin, you can have two keys that protect your Bitcoin, and Unchained has one key that also protects your Bitcoin. And the typical setup at Unchained is a 2 of 3 multi-sig, meaning 2 of those 3 keys are required to move your Bitcoin. So if you happen to lose one of your keys, then Unchained has the extra key as a backup to help you move your Bitcoin. And so this enables you to kind of have the best of both worlds when it comes to like holding something at Coinbase where you have completely no control, or doing it all yourself where you have your own cold card or ledger or whatever your favorite hardware wallet is. But that's extreme responsibility in the sense that if you happen to lose your seed phrase for that one key, you might lose all of your Bitcoin. With Unchained, you have this, there's no single point of failure. And so therefore, if you happen to lose one of your 2 keys, then you don't actually lose all your Bitcoin. Unchained is there to help you out. So it's kind of like merging the best of both worlds of self custody, where you do have complete control of your Bitcoin, because again, you only need 2 keys to move your Bitcoin, and Unchained only has one. So Unchained can never, if Unchained disappeared, you'd never lose your Bitcoin. But then two, you have um, you have the Bitcoin, you have the 2 keys, and so like you don't have to worry about if you lost one of the keys, your Bitcoin's not gone. So that's kind of our core product. Like you can set up that in a personal vault, a business vault, or an IRA account, which is kind of our big hot growing product right now, where you can set up a traditional or Roth IRA, the same model. You hold the keys, and people can, if they've been working at an employer for years and they have this old 401k that they haven't touched in a while, and they can roll that into real Bitcoin where they hold the keys into an Unchained Roth or traditional IRA, depending on where their 40, how they initially set up their 401k. So that's kind of like the main product, custody. And then there's also like buying and selling Bitcoin directly from cold storage, which it could be beneficial to miners. For example, if you're a miner and you connect to your mining pool, your mining pool occasionally pays out to your wallet, which could be a hardware, it could be an exchange, it could be a hardware wallet, it could be an Unchained vault, which is again a 2 of 3 multisig. You can literally be sending your mining rewards to your Unchained vault and where you control the keys, and then also be able to sell your Bitcoin to pay your electricity expenses or buy more miners or whatever. And you can do that all without sending Bitcoin to an exchange. You just do it, through the Unchained trading desk. So Unchained has a lot of different products. Those are kind of like the main ones at a high level that are probably most useful to miners. But there's a lot more at unchained.com.
So you mentioned a couple things, and you can always use these tools in tandem as well. And I think it goes back to your earlier point. Is there's a couple of ways that you can outperform Bitcoin. You can be really good at mining. You can take responsible leverage as well, and if you can do those two, you know, in a very skillful way, that can be a way for you to outperform Bitcoin across cycles. Of course, if you're making good decisions, this is not like a blanket statement, one size fits all kind of thing. But especially if you're growing a facility or adding more assets to your balance sheet, you're either purchasing miners, expanding capacity. There's a lot of times, especially right now, being 6 months into the next halving epoch, where it's really historically a bad time to be selling your Bitcoin, especially to pay for something like electricity. So if you're in a position like us, it makes a ton of sense to not sell your Bitcoin, instead take out a Bitcoin backed loan, pay your electricity bill if you need to, or even expand your capacity if that's on the table for you. So, as well as I do, the thing that people regret most if they've been mining or they bought Bitcoin early is selling to get something that didn't outpace the return of that asset. So if you can take responsible leverage and still grow your balance sheet, still grow your business, that's probably a smart vehicle to still participate in Bitcoin's returns, but also grow your business.
Yeah, absolutely. I mean, and as you probably know, like the mining industry and Bitcoin in general are so cyclical that it's cool to have the option to borrow against your Bitcoin. And when you're doing it, like for example, maybe potentially now, which I personally expect now, but obviously not financial advice, right? Near before a bull market, that can help save you from selling your Bitcoin to expand your operations or buy more machines or just pay your electricity expenses. And yeah, it's a potentially a great way to really maximize your returns.
So you've had a unique perspective getting to talk to miners and be part of a mining company for several years through a couple different cycle environments. And I'm curious, since you talked to a lot of people who had a lot of wins and losses, what were some of the most profoundly, I guess, counterintuitive things that you learned from people through that process of how to be successful in the mining space?
Yeah, it's a really great question. I mean, probably the biggest takeaway that I've had working in the mining space is kind of again related to the cyclical nature of Bitcoin. Back in 2021, for instance, that was when all of the public miners were basically like announcing that I they just bought 100,000 S19s probably, or maybe S19J Pros at the time, by then. But they would announce that they buy all of these machines and they would have like no idea where to put them. But they would do it because hash price was so high, the Bitcoin price was so high, difficulty was so low that whenever they would make these announcements, like their stock price would go up in the short term, obviously. But mining, from my experience, like difficulty, or I guess mining difficulty lags price, and it's very, very logically so. They're very like it's a complex relationship, but generally speaking, I would say mining difficulty lags price in the sense that Bitcoin's price can be bid up extremely fast in a parabolic manner. very aggressively. For example, in 2020, it went from like $8,000 or $10,000 or whatever, and then early 2021, it was up to $69,000 or whatever ended up going up to. Whereas, so that was say a 7x increase in the price of Bitcoin. There was definitely not a 7x increase in mining difficulty in that short period, from late 2020 to, or mid to late 2020 to early 2021. And that's because like it's going to be very difficult for mining difficulty to grow that fast, because growing mining difficulty requires building out facilities, building ASICs, shipping those ASICs across the world, connecting those facilities to like energy providers, doing it at like a really big scale. Like people don't realize how big of a scale some of these Bitcoin miners are operating at. And it just takes a lot of time and resources and energy. And it's not something that can be done overnight. Whereas Michael Saylor can kind of deploy like $1 billion relatively quickly. Maybe not like in 24 hours, but he can maybe do it in a week or a couple of weeks or so. So yeah, I would say like the biggest, kind of related to your question, like what is something counterintuitive that I learned about mining is that everyone deploys capital at the wrong time, and then everyone's not deploying capital at the right time. And it's logically so. Like I feel like this is probably pretty common among commodity cycles in general, whether it's oil, where it's like the price of oil gets bid like crazy. Then everyone's like, oh my gosh, like I got to start drilling for oil. Oil company stocks are at all time highs, which maybe they're like, okay, we need to expand. Like it's so super profitable. Like we need to increase supply to meet this demand. And then the entire market does that at the same time. And then the supply just becomes so plentiful, and then all of a sudden demand starts to come down for whatever reason. Then all of a sudden everyone's like, oh my gosh, the market is producing so much supply, but demand's not there. And then the weakest players in the industry end up getting weeded out, whether that's in the oil industry or the Bitcoin mining industry. So yeah, I think it's just highly cyclical, and people just unfortunately end up deploying capital at the wrong possible times.
I totally agree. And we already said not financial advice, so we're covered here. But that period that you were mentioning, mid 2020 to mid 2021, is exactly the same period that we're sitting in right now. Like
Yeah.
6 months post halving, Bitcoin price absolutely rips. Anybody that has capacity online sees their mining economics just absolutely go through the roof. And it's a physical business, right? So it's really tough to put on either megawatts or machines as quickly as this digital distributed global 24/7 liquid asset can just really quickly run away from you.
Yeah, 100%. It's very difficult.
What do you think is something that people think about mining that, is broadly repeated but is utterly ridiculous and totally false?
Broadly repeated. That's a good question. I Let's see. Broadly repeated. One thing that I guess comes to mind is I think a lot of people, like maybe on Twitter, like they view, and maybe I don't know, maybe this isn't a great take, but people tend to say like, or like you have like the mining mafia on Twitter. I don't know if or I think that's like a group on Twitter. I don't know, something like that, where they're like buying miners and holding them for long term. I tend to think that like mining as an industry, unless you have a really really good edge, which could be you buy machines super cheap, you have extremely cheap energy, something along those lines. It's just like a brutally competitive market. um and so like holding like these mega miners for like a decade plus, or not even, probably longer than that, like a decade, they might actually do pretty well, but maybe say like 2 decades or more, I think that like that's probably just not going to be a great trade per se. Like you're probably better off just holding Bitcoin. If you are a smaller miner, or again you have some sort of edge on the market, then maybe you can continuously do very well. um but I think just like buying and holding like big, large cap miners, even though they're not really large cap, but large cap, like the largest Bitcoin miners, I think you can make a lot of money in the short term. Like if Bitcoin goes on a massive bull market, those are probably going to outperform almost everything on a short time horizon. But like holding that for a very long time is just going to be a difficult market, or it's going to be a difficult trade. And just kind of related to what I said before, where if these entities are so profitable, then this is just a massive incentive for more hash rate to come on the network, raise mining difficulty. And at the same time, the subsidies dropping every 4 years. Obviously, the price of Bitcoin typically more than doubles every 4 years, so you're kind of fine, but you're still fighting that natural wave of an unstoppable decreasing block subsidy. And it's also just yeah, it's just a brutal industry. So like a very long term hold on a large miner, I think is not a great strategy personally.
You may think that's not a strong take, but I totally agree with you. And when I talk to investors who are thinking about, should I invest in your company? Should I invest in miners, or should I go out and be part of these large public companies? Like what kind of edge can you have against a company with a multi-billion dollar balance sheet? And what I often tell them is, Bitcoin's got a 63% compound annual growth rate. And these miners are already, managing hundreds of megawatts or gigawatts of energy. It's really hard to put on enough capacity every year to keep pace with that. Like these are what I would call mature companies at this point. If you're going to take a bet on a miner and try to outperform, if that's the only reason to try to take on a bet with a miner, it should probably be a small one that you have some kind of edge in believing in, because most of these companies, in order for them to keep the same growth they had the last few years, would have to just put on, I mean, gobs of energy that is, logistically really difficult to procure
Yeah.
at that kind of scale, especially at a good price. So I totally agree with you. Um, maybe a follow-up question to that would be, what do you think that smart miners do differently?
I would say like they're very strategic about like their machine buys and like what price they're actually paying for them, and like how they're buying them, and like which model that they're buying. Like ideally, it's not just as simple as, like in AI, it might be as simple as buying the latest and greatest GPU from NVIDIA, and maybe that works. But like in mining, like you can probably get more strategic. Like in a way, a strategy that I've seen before, and I think works somewhat well, or has potential to work very well if you have access to very cheap energy, is like when miners are capitulating and people are struggling, it makes sense to buy the ASICs that are being capitulated, which may be like older generation ASICs that are like not the late, not super old by any means, but like stuff that was good a few years ago and is not great today, and you can buy it for pennies on the dollar, plug it in. If you have cheap enough energy, then it's going to be a great business model, especially and especially if Bitcoin's about to rip, post a minor capitulation, which is historically kind of how it plays out. But yeah, I mean, I think that like you got to have cheap, you got to buy machines at the right price, and I think like people don't realize how critical of a factor that probably is. And then two, you got to have energy at a cheap enough price as well. So those are kind of like probably the two main things that I would say there.
I usually tell people, I mean, it's helpful when you're talking about Bitcoin or you're talking about mining. These are things that people don't really have a natural grasp for just because they're such new concepts. But when I talk to people about what to select for mining equipment, I'll equate highly efficient machines, like the very top of the line, whatever's being offered right now at the highest price, as kind of like an in the money call option on the
Yeah.
stock. And then these, whatever is older as a much further out of the
Yep.
money. So if you get an in the money option, you will make more money potentially than the underlying stock if it moves in the right direction. And an out of the money stock, or excuse me, an out of the money option, as it gets closer and closer to whatever your strike that you've set, these lower efficiency miners suddenly come into
Yeah.
profit. There's so much more money to be made if you are right on that bet. But the whole time that you're waiting for that bet to pay off, you could be losing
Yeah.
money and potentially, expire
Yep.
worthless if you handle that strategy poorly.
Yeah, exactly. I mean, that's a great way to think about it. If someone has played with options before, that's a perfect analogy.
What do you think? Because I mean, mining is such an analytics heavy industry. I mean, there's so many things that you've got to pay attention to, whether it's hash price, network difficulty, what the efficiency of the best miners is. Um, how do miners and other Bitcoin related companies get an edge with data analytics? And I know that this feeds into kind of some of the research that you do, and I love the way that you frame these things. So how can people get an edge just in the space more broadly?
Yeah, I mean, the biggest like there's so many like little things that you can do. Like I said, like figuring out what what machine you're going to buy, the price that you're going to pay it at, and maybe like create like some sort of forecast model on like what you think the difficulty is going to do, what you think like price of Bitcoin is going to do, what you think your energy rate is going to do. Hopefully, it will stay the same or go down. So like you can create that model before you like deploy capital just to see like, okay, what's probably going to happen if I have these base assumptions. And I think that's like a great idea, and we definitely did that at Blockware for a bunch of clients. um the other But I guess like the probably the most important thing that it will obviously come down to is like Bitcoin price. And so it's like you can, if your energy rate is 9 cents, 8 cents, 3 cents, 2 cents, whatever it is, um that's great. But like if Bitcoin does a 5x, then like everyone's going to be pretty much crushing it. Obviously, like, it's going to be a lot better if you have, super cheap energy that's better than the rest of the market. But a lot of it's going to come down to the price of Bitcoin on like what you end up how you end up actually performing, for like a big chunk of what you're working on. The other thing that I've seen people do before, and we did this Summit block where it's been a while since I've looked at it, but we would find research or even like do our own surveys and stuff where we would pretty much try to model like what the network is operating at today from a mining perspective. And what I mean by that, I guess, is like what are the different models of machines and ASICs that are probably deployed on the network. You'll never know any of this for certain, but you can kind of estimate based on just trying to find data on the internet and whatnot. And so if you can figure out like where machines are, what machines are running, what energy prices they're operating at, you can kind of see like, especially when hash price is really low, like it kind of is now, you can kind of see where, okay, if hash price drops further, how much would mining difficulty potentially drop. And then you can kind of like model that scenario into like, okay, well, if I'm operating this machine at this rate, and that happens, will mining difficulty drop enough for me to remain profitable at that time? And like, if you can see like where your competitors are and you can outlive your competitors and remain profitable, more profitable than them, then that's going to be obviously great for you and very important. So I think that's one thing that's really cool that I haven't seen in a while, and I hope the mining industry does more research on that, just kind of like showing like the layout of the network and seeing where everyone's operating at. And then you can kind of predict mining difficulty. Obviously, there's going to be like a delay where, in my experience, some miners that are borderline profitable or even unprofitable that are locked into significant energy contracts, they're not going to necessarily turn off their machines overnight for whatever reason. Maybe they have to consume a set amount of energy to continue operating. And so maybe there's like a few month delay and before certain miners actually do turn off, because they'd probably be going bankrupt if they're turning off because they're like defaulting on some sort of energy contract or whatnot, or they just run out of cash. Um, so yeah, it's complicated, and it's not as simple as just like this one's unprofitable, that means difficulty goes down. This one's profitable, that means difficulty goes up. Um, it's a little more complicated than that, but it's kind of cool to see what the potential layout of the network would be and then kind of build a model around that.
You just mentioned no less than like 3 things that I wanna make sure that we actually build a model for internally. We do have a simpler one that if people are kind of interested in playing around with, Joe mentioned, Blockware has models. If you follow us on Instagram at Abundant Minds or Twitter at Abundant Minds and just send us data, DATA, we can share with you kind of a more basic model. Does not incorporate what Joe just shared, but some of the kind of do's and don'ts of mining, profitability calculator between different kinds of units that you might buy at different prices, as well as what it's like to actually stand up a facility from the ground up and what it costs and kind of the economics behind that. So always do your due diligence and make sure that you run some numbers before you go out and start allocating capital. Um, one thing that you've written more recently that I enjoyed, and you've got several videos on this as well. We all like to make fun of one of the greatest investors of all time for his cognitive dissonance around Bitcoin. But he's got this rule, which is never lose money, and rule number two is refer to rule number one. And you did a piece called Wealth Melting Could you tell us a little bit about what that goes into, and what the thesis behind that is?
Yeah, definitely. Yeah, that one video that I made today on Warren Buffett's rule, I thought was kind of funny. I guess like I've heard him also say this quote before, where he was like, they asked him like, Warren, would you buy all of the Bitcoin, all 21 million Bitcoin for like $100? And he said like no. And I thought it was kind of funny because it's like to some extent he's kind of right. Like if he actually owned 21 million Bitcoin, like it's kind of pointless. But it's also like if you said the same thing for dollars, it's like, Warren, if I gave you, if you could buy all the dollars in the world for one building that you have, would you do it? And he's like, it would still be no, because like then you would have all the dollars, and it's like it's kind of this exact same thing you just said with Bitcoin. It's like the point of Bitcoin's good money because it has those unique properties, and it's also like distributed through proof of work, and there's like a network of people that hold the money. And it's like, yeah, if you destroy the network and one person is the network, then the network is worthless. Like that's the entire point of the network. So I think that was also kind of funny related to Warren Buffett. But yeah, I published a report earlier this year titled "Your Wealth Is Melting," related to kind of Warren Buffett's rule number one of never lose money. I think like he's in this, like I think it's a good rule, obviously, and I think that he's probably not even following his rule. Like the dollar, he's obviously referring to dollars when he looks at his assets and he tries to evaluate his financial returns and what's a good investment and what's not a good investment. My argument is obviously Bitcoin is the better money. You may not understand this, but it objectively is the better money because it has superior monetary properties. And therefore, if you're going to follow that same rule, then it's not about not losing dollars, which is how people think of losing money. It's about not losing Bitcoin or Bitcoins. And so it's like when people think of, oh, I have $1 million portfolio in 60% stocks and 40% bonds, they're thinking, oh well, I don't want to lose the dollars, even though the portfolio is not necessarily composed of dollars, it's composed of a bunch of assets. You can think about that the exact same way. You can be like, I have a portfolio of 100 Bitcoin, even though it may not be in Bitcoin. And so you can be like, okay, well, how is that portfolio performing over time, and how has it performed over the last 10 plus years? And most people, unless they're holding cold storage Bitcoin, or a Bitcoin adjacent, uh, you know, investment like MicroStrategy, mining, or Bitcoin venture capital, most people that are not doing that, that have the typical portfolio, they're getting crushed in Bitcoin terms. Like I think in one of the examples that I mentioned today, like a house, you could have bought a house maybe 10 years ago or 8 years ago or some set number of years ago for 500 Bitcoin. Today, a house in the United States is worth 7 Bitcoin, typical house. That's like a nasty negative return. You lost a lot of money there, a lot of Bitcoin. Same with the S&P 500. Like 8 years ago, the S&P 500 is down like 99% in Bitcoin terms. Bonds are also down like 99% in Bitcoin terms. And so it's just kind of like reframing the argument in a way that might appeal to different people, because like I think a lot of people think about Bitcoin as this like crazy get rich quick, highly volatile lottery ticket where they're like, oh, like this could be, yeah, sure, like it could be millions of dollars one day. I don't know. But in reality, it's like, no, it's actually just money. And you're actually losing a lot of money by like not holding a lot of Bitcoin right now. And you have been losing a lot of money. It's like your wealth is actually melting when you're evaluating it in good money. And so the whole report kind of just goes through why this has been happening and why, like, over a very, very long time horizon, a lot of wealth outside of Bitcoin is kind of just going to continue melting to zero, towards zero, not eventually to zero, but towards zero, in terms of Bitcoin. And it goes through stocks, it goes through real estate, it goes through bonds, it goes through commodities. And it just shows that Bitcoin is the only asset in human history that it has no dilution risk and it has no counterparty risk. So no matter how much time, energy, or resources humanity, puts into it, we're never going to be able to create more than 21 million Bitcoin. And instead, like right now, we store all of our wealth in Nvidia. We store all of our wealth in real estate. And when we do that, we incentivize the production of assets that are dilutive to those assets. For example, like Nvidia, if we store $3 trillion worth of wealth in Nvidia, all that does is incentivize VCs to fund competitive startups to Nvidia to try to take market share away from Nvidia and try to take some of their future free cash flows, which is, exactly what Nvidia is valued over. Like they're just churning profits or they have high margins for now, but what if someone creates a better GPU or something along those lines? Or if you hold a bunch of wealth in real estate or single family houses in a specific place in the United States, well, what if like there's a neighborhood next door that gets built and thousands of houses go up? Like we can build more of it, and in fact that's exactly what's going to happen if humanity keeps storing wealth and assets that we can create more of. Like that's just the natural market response. We're going to be able to create more of it. We're going to, for in the case of Nvidia, we're going to fund competitors that are going to compete with you and try to take your future profits. Whereas Bitcoin is like, no matter how much wealth we store in Bitcoin, the market is not going to be able to melt it away. Maybe early holders like sell out of it or buy other assets or consume or do whatever they want. But at the end of the day, like there's, you can't create another money because money trends to one. Like that's the entire point of money. And so you can't create another form of Bitcoin and devalue it that way. But you also just can't create more than 21 million Bitcoin. So that's at a very high level the thesis of the report. It's just kind of reframing the argument of how to think about wealth now that Bitcoin exists.
It's all about the measuring stick, right? What are you actually using as your unit of account to make some kind of accurate and truthful decision? And we talked about it with the large cap miners, right? If you were just looking at dollar denominated returns for the largest public miners, they've in most cases made a ton of money if you're using dollars as your measuring stick. But 9 out of 10 of these large miners have less Bitcoin today than they had 5 years ago, which is strange if your goal as a business is to accumulate Bitcoin or have more Bitcoin per share per se. And it reminds me of all the different ways that you can measure your wealth or your return. I mean, we on this show, obviously, and anybody that you and I talk to, we're thinking about Bitcoin as our unit of account. But even if you just measured your S&P returns against, denominated against the CPI or denominated against the monetary inflation rate or the expansion of the money supply, it tells you a very different story when you change what your measuring stick is for all of these other return profiles for assets. It sounds like that's kind of what you're getting at, is that anybody who's making a capital allocation or an investment decision in most cases is using the exact wrong frame of reference when they're making decisions.
Yeah, exactly. And I think a lot of like some people like maybe hedge funds or other capital allocators will like use the S&P 500 as like a benchmark, and I think that's like a fair argument, but it's like no one is really using Bitcoin as a benchmark, and arguably like that should be the benchmark. It's just no one has quite caught onto it quite yet.
I mean, in fairness, it's really hard, right? If you're a Bitcoin venture capital firm, like I applaud the people in the space like Ego Death and Early Riders and other Bitcoin denominated venture funds. Like to use that as your unit of account really holds you to a crazy standard of excellence that most people are not ready to sign up for.
Yep. Yeah, 100%. I mean, and it's you add on like you got to add on we're living arguably through the monetization of Bitcoin, so it's not only is Bitcoin like harder money in general where it's going to be harder to outcompete Bitcoin, but it's like Bitcoin's rapidly being adopted at the same time, so it's extremely difficult to do so. I mean, I would say like even in like traditional markets, it's extremely difficult for like typical hedge fund or any sort of fund to like outperform the S&P 500. Like most don't even do that. Obviously, Bitcoin would enable you to probably do that, and it has like enabled MicroStrategy to do that. But it's very difficult to do so with Bitcoin as your benchmark, especially today.
What do you think? I mean, you're a numbers driven guy, you're a data driven guy. You analyze things thoroughly. What do you think holds people up from seeing the truth in numbers that is presented by just the sheer returns of Bitcoin and companies that have integrated Bitcoin onto their balance sheets?
Yeah, it's a great question. I mean, Jesse Myers, who's Croesus on Twitter, or he used to, I don't know, maybe it's Jesse Myers now, but he wrote a good piece called "Why the Yuppie Elite Dismiss Bitcoin."
Love that
Yeah,
one. I love
it
that
was
one.
great, and to me, that one like really resonated at the time when I read it. Like I think a lot of people, like at least in my experience, thinking about like friends and colleagues that like went deep into consulting or investment banking or whatnot, like they're very like path driven people and like they kind of have their head down and they're focused on doing their one thing and they're doing it really well, and they're not necessarily the type of person that's going to go out and like do this crazy weird thing like something like Bitcoin. And then they honestly kind of get in their own echo chamber of like, oh well, like obviously like you need to do investment banking, then you need to do private equity, then you need to do whatever, blah blah blah, and like the path keeps going, and like there's kind of a set formula for how to do that, and like those specific types of people are like kind of like rule followers, and like they're going to keep going down their path, getting their MBA, doing stuff like that at Harvard or Stanford or whatnot. And I think like just that it ends up being the opposite person that would, you know, kind of come to understand Bitcoin. I would say like you also have like so much, and again, like they're rule followers. So they're not necessarily going to go out of the way to go against extremely against the grain to say like, hey, we need to adopt a Bitcoin strategy once they finally make it to their level. Like they worked so hard and did so much, you know, had invested so much time and effort to, you know, climb the corporate ladder or do whatever. And now it's like they're not going to like risk their entire career doing something that's perceived insane and crazy still, despite the crazy returns, to just to like, you know, maybe like put their name on the map like in a kind of a big way. But in reality, like they're already making a great salary, they already have great benefits, like maybe they have a family. It's like they don't want to take risk, they just want to like, they're already in like the top 1%, so like why change it? Maybe they'll buy a little Bitcoin, and then maybe in the next bull run or the following bull run, they'll be like, okay, like maybe this actually makes sense and I'll do it. And I do think that's kind of what's going to happen over time. It's just like more bull runs, more price, more NGU, more kind of getting the stigma away that like Bitcoin is just like this tulip bubble Ponzi that's worthless. Like once that starts to go away and just the returns keep happening, I think it's kind of just going to eventually happen where more people are going to be interested in Bitcoin. I mean, like you already have people like Larry Fink going on television being like, hey, like Bitcoin is above governments. It's a valuable monetary asset that you know, is non-sovereign and not controlled by any currency, and like it's valuable. And like we, by the way, we launched a BlackRock ETF and like there's billions of dollars in it. Like stuff like that is obviously waking up people. I mean, you can, in my opinion, like you can't just be, even if you're older and you've kind of followed the rule book, uh, and you've stayed away from collecting digital pet rocks or whatever, and that was your original opinion of Bitcoin. It's like at a certain point you got to be like, take a step back and be like, all right, maybe I was wrong here. Like there's a lot of money in this. It's outperforming me. Maybe it's actually just good money. And to me, it's like we also have like so many podcasts now. We have so many books now that the narrative to like understand Bitcoin, like Michael Saylor, I think is great. The narrative and the way to understand Bitcoin is a lot better than it was like 7 years ago. I like 2017 when I originally got into it, I read the Nakamoto Institute, which was written a lot by like Pierre Richard and Michael Goldstein and a few others. Like it made perfect sense to me, but it was just like this random blog on the internet, and I was like, I mean, maybe this is right, but maybe I'm just like kind of losing my mind at the same time. But now it's like you have Larry Fink saying the same thing on national television, so it's like, all right, the education is basically the same. It's good. Maybe it's like more compact and more professional, but it's also coming from like very highly reputable people that have really great reputations, at least like in traditional finance. So I think it's changing, and they will come into Bitcoin, but it's just going to take some time.
So you've had a unique experience where you've gotten to hear a lot and speak to a lot of the best thinkers in this space, and of course as well get a chance to orange pill as many people as you possibly can. So I'm sure you've come up with some great analogies, metaphors, kind of like shorthand thought vehicles that you can help people with. I've heard Bitcoin compared to a black hole, an energy battery, you know, a life form, mycelium, digital gold. What what is your favorite analogy or tool to help people understand what this is?
Yeah, I mean, I think it like depending on who I'm talking to, I'd probably frame it differently. One of my go-tos that I think is if I'm talking to like a complete beginner and I'm not trying to like scare them and being like hyper Bitcoinization is here, like are you paying attention or not? I always typically just go for like the digital gold narrative. And I'm saying like, hey, gold is currently roughly a $20 trillion asset, maybe 18 trillion dollars, something along those lines. Bitcoin is a $1 trillion asset. If Bitcoin just becomes digital gold, and arguably it's better than digital gold, it's more scarce, more portable, more durable, more fungible, whatever. Then at least just on like a comparable basis, you would expect Bitcoin to become gold. And like it could do that relatively fast. And that would be a roughly 20x return in the price of Bitcoin, which is like an extremely great return, especially if it happens like in a couple years or a few years. So that's kind of like the way that I lead with it because I don't think there's really many good arguments against that. At least I've never really heard one articulated to me. And so yeah, that's
Tried and
kind of my
true.
go-to.
I love that. Simple always wins, and the classics never go out of style. And like you said, I mean, we can, especially if you've spent hundreds or thousands of hours thinking about this thing, you can really go almost too deep down the rabbit hole for most people to follow you who haven't done a commensurate amount of research. So, sticking to the basics and not scaring people is an important way of making sure that we bring on as many people as we possibly can, and that they understand this and they don't run the other direction because you're trying to tell them that some digital asset is like mushrooms. Um, Even though I totally agree, it's a great framing. What do you think? What do you think that ahead of us we have as the biggest hurdles to clear still, as just Bitcoin the asset being accepted in the mainstream and even miners as well? What do we still have to overcome to be widely understood and even accepted as a common good?
Yeah, that's a good question. I mean, I feel like to some extent, like the Bitcoin is gonna like approach like some sort of like fork in the road, where it will either like continue being digital gold, kind of like the Michael Saylor version of, and I don't think either one of these is necessarily bad nor good, but it might just be something that kind of happens where Bitcoin is digital gold and more of a reserve asset, and the dollar remains the world reserve currency, which I think is probably like at this point, at least for like the next two decades, that's probably like my base case of what I expect to happen. Obviously, eventually, it could theoretically become a global currency, and we're all using like something like Lightning or another layer two to be spending Bitcoin, and there's no need for any sort of like government currency. But I do think that that's this kind of like divide is going to be more obvious over time, and I don't know exactly like what that means for the future of Bitcoin, but I definitely see that as something that's approaching. Obviously, I still think in either case, Bitcoin is going to go up massively, especially from where it is today. But that's kind of like a big thing that I kind of see happening. May not necessarily be bad or an obstacle per se, but it may be an obstacle to becoming using Bitcoin as like a currency where people accept it at Walmart or your local store. So that would be one, but I don't know if that might just happen. There might not be anything that we can do about it per se. Maybe building like better layer twos and stuff is stuff that we can do. But if there's always like a tax hurdle around spending Bitcoin, or you always have to like report your capital gains or whatnot, maybe it might take longer than we some of us might hope.
It sounds like, and based on kind of where you focus your time and your thinking, that you would maybe agree with me that the medium of exchange, the payments problems, that's great if we get there or when we get there. But the world right now, its chief problem is storing your value and storing your energy and your wealth far into the future. That if we can just solve that one problem, that is enough of a good to really be shouting this from the rooftops, and that everything else is kind of secondary after that.
Yeah, I would definitely agree with that. And I also think it's important to separate like the aspect of like self custody from payments, like the ability to buy Bitcoin and send it to your own wallet, versus just like using it to buy Starbucks coffee, like in a way that's both a payment without a trusted third party. If you get your coin get your get your Bitcoin from Coinbase or maybe ETFs. You'll enable eventually be able to withdraw your Bitcoin from ETFs. Like that would be a good thing, and I wouldn't classify that as like a medium of exchange. But I think that's important for Bitcoin for people to be able to withdraw their Bitcoin, take self custody, and verify that they have real Bitcoin and enforce the 21 million supply cap. So yeah, I mean, completely agree.
When you're thinking about this from the standpoint of larger institutions, governments, I mean, this is technology for the people first and foremost. But we're getting to the point where we have to accept that the larger players, the larger capital allocators, and the larger power structures are going to need to look at this and think about this. So, I mean, a couple of presidential candidates have talked about strategic Bitcoin reserves. But how do you think that governments and large institutions should look at this technology or evaluate using this technology when they're formulating policy and they're thinking about Bitcoin?
Yeah, I mean, I think it's crazy how far we've come. Honestly, like thinking that we've actually had like one of the top presidential candidates announce that he would actually want to enact a strategic Bitcoin reserve. Like 5 years. Like people say Bitcoin adoption happens slow, and to some extent that's true, but it's also like 5 years ago or 7 years ago, if you would have said that, like people would have been like, "Oh my gosh, like this is crazy. It's going so fast."
I wouldn't have called it 2 years ago,
Yeah,
man.
exactly. So yes, the question of how should governments or countries be thinking about Bitcoin? I mean, I think it's like the way I see it is it's this new technology that exists, whether it's similar to like the internet or a nuclear bomb. It's uh, it's just something that now exists in the reality that we live in, whether you like it or you don't like it, for whatever bias that you may have coming into it originally. It exists, and you need to move forward knowing that it exists and that you can't just get rid of it. Like maybe you can try to block a small group of people, which may be your own citizens, from accessing it, but that doesn't mean it doesn't exist for the rest of the world, and it doesn't mean all of your citizens are going to perfectly comply with every law and regulation that you have. And if it is something like the internet, which I think is possibly bigger than the internet, then you want your citizens and your businesses and all of your people to be using this and building on it and holding it, because it's it's now the best form of wealth that we can ever have. And so if like you prevented, like if the United States had blocked the internet and we never had Google, Apple, Amazon, blah blah blah, we would not be probably the economic powerhouse that we are today. Same with Bitcoin. If Bitcoin is the best form of money we've ever discovered, you want to make sure that your people hold as much Bitcoin as possible, and you even want to make sure that if you're a government, that you hold as much Bitcoin as possible. Especially if you currently as a government have the ability to print money that for some reason people use. Like seems like an absolute no brainer that you should at least be hedging that risk that one day you may not be able to create money out of thin air. And because now that this new form of money does exist. So yeah, I think governments will have a lot to learn, but like, and it's things will probably crazy things, not crazy things, but like things will happen in the sense that maybe governments have to become more physically responsible, in the sense that they can't just run multi-trillion-dollar deficits and have no consequences, or not basically hyperinflate their own currency, because now there is an escape valve, which is Bitcoin. So yeah, I mean, I think it's going to be very interesting to see how it plays out, and I think a lot of people probably are underestimating like how fast it theoretically could play out. I don't know if it'll be super fast, but it could happen really fast, and how much like could change, because money does kind of touch so many different aspects of our life. You don't realize like how rapid things could change, especially when you put a massive economic incentive in front of everyone's face, and if everyone really does realize that their wealth is melting, then things will change pretty rapidly.
Totally agree with you. And it would be hard to get to this point in us talking and not be just unbelievably bullish listening to us. So, to temper people and make sure that they go into this with eyes wide open, that they've got sound advice. If someone's made it this far and they're thinking, oh, I've got to go buy Bitcoin and I've got to go buy some miners, what kind of advice would you give to people who are, one, thinking about either allocating or allocating way more to Bitcoin? And then what kind of advice would you give to people who are thinking about allocating to mining?
Yeah, I mean, my advice when it comes to Bitcoin and mining is you need to be mentally prepared for 4 years of extreme volatility. Like you need to be mentally prepared that if you put X dollars into Bitcoin, that a year from now you're going to only have 20% of what you just put in. And because Bitcoin or whatever just fell 80%. So I think that that's something that like you just have to like mentally prepare for because at some point it will happen. Hopefully you aren't timing the top exactly, but I would argue that it's probably going to happen again at some
Guilty,
point.
man. I've done it a couple times now.
Yeah.
Still
I
here.
mean, yeah, I've obviously bought plenty of tops. I think like Michael Saylor is famous for saying like he's always going to buy the top forever. So yeah, I mean, I think the volatility is going to be here. It's going to be rough. My advice when it comes to like buying Bitcoin is to, experiment at first. Like if you're completely new to Bitcoin, it's okay to, buy a little of the ETF, buy a little bit on Coinbase or River or whatever, some sort of trusted custodian. But once you have,
Or Unchained.
yeah, or exactly a long term, I think the best way to do it is once you have enough Bitcoin is to use Unchained, where you actually hold the keys to your Bitcoin and you have no single point of failure. So yeah, that's kind of what I would give for advice I'd give for buying Bitcoin and mining. And then just mining, I would think, tell people to like use caution, like look at the market cycles, make sure like you actually think about what you're doing, like what machines you're buying, like where the machine's getting deployed. Are you building the site? Are you hosting it somewhere else? Like however you plan to do that. And then like run the numbers, like figure out if it makes sense and like compare it to the opportunity cost of buying Bitcoin. Because again, like if Bitcoin is the hurdle rate or Bitcoin is your unit of account, you want to make sure you outperform Bitcoin or you have a good chance of outperforming Bitcoin. So those are my high level thoughts.
Love it, man. And if the exchanges ever run out of Bitcoin, there may be a spot in a facility of ours to mine it yourself and have some sovereign access. Joe, you've been super generous with your time and appreciate you sharing your research and all the value. And just, man, you've got such a cool, diverse array of experiences in this space that people can learn from. Any final thoughts you want to share with the audience, and definitely where they can find you and keep up with what you're working on?
Yeah. Thanks, Bo, for the invite. I appreciate coming on the opportunity to come on y'all's podcast. We mentioned Your Wealth is Melting, which is a report that I published earlier this year. If you want to download it for free, it's at unchained.com/melting. But you can find me personally on Twitter. I'm I Capital, or you can just type in Joe Burnett. And then on YouTube, you can probably type in Joe Burnett Bitcoin, and I'm probably one of the top channels that comes up for that result. But yeah, that's it. Thanks again. This was great.
Appreciate you so much, Joe. And as I mentioned, you were super helpful to me early on with your insight as well as the people that you had on your show for years. I would credit it in a large way with me getting into mining and not getting blown up. So really appreciate everything you've done, and I know that I'm probably one of thousands of people who have heard you and had a similar experience. So just want to say thank you from me and everybody else for all the value you've shared. It does not go unnoticed and definitely contributes to everybody having a much more successful journey in this space, which is what we're all here to do.
Awesome. Yeah, that's great to hear and appreciate it, Bo.
Love it, man. Well, until next time, thanks for coming on.
Appreciate it.